Hi, I'm Christina from the Lagome Group. If you're watching Ontario's agricultural real estate market, especially sectors like vineyards, distilleries, and tenderfoot farms, May has brought a few important shifts that are worth paying attention to. We're seeing a clear transition happening. After years of strong growth, Ontario farmland prices are showing signs of settling. In 2024, cultivated land rose just over 3%. That's quite a slowdown compared to the 10.7% jump the year before, and nearly 20% in 2022. This isn't a collapse, but it is a reset. Some of that is due to affordability. According to Farm Credit Canada, affordability is at its worst point since the early 80s. That's a huge barrier for new and younger farmers trying to break into the industry. And it means less competition at the entry level. Now, not all regions are moving the same way. In the Central West, prices climbed over 13%, mostly because of pressures from urban sprawl. When farmland becomes a future development play, you see these kinds of numbers. But head to southwestern Ontario and the story flips. Some counties saw values drop for the first time in over a decade. Essex County, for example, was down nearly 7%, and that was largely driven by soil quality issues and a flood of new listings. Meanwhile, places like Grey County are going the opposite way, up over 11%, largely because of livestock farming demands and migration from urban areas. It shows how localized this market really is. If you're only watching provincial averages, you're missing the actual story. Let's zoom in on the Niagara Peninsula. This region continues to be a hotspot for vineyards and tenderfruit farming, such as cherries, peaches, and pears, all thriving thanks to the local microclimate. And while we don't have granular data for vineyard land specifically, sustained demand for Ontario wines points to continued investor interest. But there's something subtle happening here. More buyers coming from non-traditional backgrounds. Investors, lifestyle buyers, even hospitality entrepreneurs. That's shifting how this land is used and valued. Heading into the rest of 2025, I think we're going to see a tug of war. On one hand, rate cuts could support values, especially in more volatile areas. But on the other hand, low commodity prices and global trade uncertainty could soften that support. The market will likely stay stable overall, but I expect to see a bigger gap between high-performing farmland and less desirable parcels. So the bottom line, this isn't a market to chase trends. It's one that rewards local knowledge, diversification, and long-term thinking. Whether you're growing grapes, raising cattle, or planning your first agricultural investment, timing and strategy are everything right now. If you'd like help navigating these shifts, we're always happy to talk.